Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Atika binti Azizan and my metric number 1182468. So I will present the portfolio investment of the 5 stock. Firstly, in this task, I was given the funds of Rn 100,000 to invest in the 5 different shares in the various industry. So I decided to choose the Chin Hin Group Berhad, Bumiputra Commons Holdings Berhad, which is CIMB, Petronas Chemical Group Berhad, Froken Corporation Berhad, and Cocoland Holdings Berhad. So all 5 shares are from the different industry, as I would like to diversify the risk and see how their return performance for 1 year from 1 January and 31st December 2021. So the portfolio weightage of the portfolio is distributed equally, which is 20% for each stock. And my expectation for the return in each stock is Chin is 50%, CIMB 10%, PCHUM 8%, Frokens 12%, Cocoland 50%. Next is the stock price and return data for the 5 stocks. So this is the price and return data for the stocks. To find the returns, the formula is T1 minus TO divided by TO. To find the mean return of the stock, we use the Excel formula, which is average. So the mean return for the Chin is 0.463%, CIMB 0.106%, PCHEM 0.085%, Froken 0.118%, Cocoland 0.098%. To find the correlation, we need to calculate by Chin and CIMB, Chin and PCHM, and so on. Next is the risk and return data. So the risk free of the stock is 3.59 and the risk premium is 3.46. The all beta of the stock is positive, which means that it has a positive relation to the market movement. To calculate the CAPM, the formula is risk free plus beta multiplied by risk premium. To find the portfolio beta, the formula is beta multiplied by weightage. So the total is 1.186. To find the portfolio return, the formula is return multiplied by weightage. So the total portfolio return is 7.694. Next is the portfolio optimization, which is use Markowitz method. So the portfolio weightage must be total 100%. So to find the portfolio variance, it is the total of the variance term. So the variance portfolio is 0.014%. Portfolio standard deviation is 1.181%. And portfolio return is 0.174%. Next is the portfolio frontier of the stock. To build the graph, it needs to use the Excel solver. The proportions of the portfolio weightage in each stock need be total of the 100%. So this is the data from the solver for plotting the portfolio frontier. In generally, the higher return is higher risk. In the point of A, it is the maximum return of portfolio. So in the point of A, B, C, and D is the efficient frontier. Investor typically choose a more efficient portfolio on the efficient frontier, take it into their account with an investor risk tolerance in order to establish a strategic asset allocation. So in the point of E is the minimum variance portfolio, which means that it gives investor the lower risk portfolio made up of the risky assets, and it also have a greater return but lower risk than other portfolio. Next is to find the Sharpe ratio, Jensen alpha ratio, and trainer ratio of the stock. So the formula of the Sharpe ratio, the expected return minus risk-free divided by portfolio standard deviation. So the Sharpe ratio is 346.39. And the Jensen alpha ratio, the formula is portfolio returns minus risk-free plus beta multiplied by risk premium. So the ratio is 6.91. The formula of the trainer ratio is expected portfolio return minus risk-free divided by portfolio beta. So the trainer ratio is 346.02. Next is the stock investment performance. In this investment, The gain total that I get through the 5 stock portfolio in 1 year is RM 51,259 and 22 cents. And my investment return is 51.3%. So in this investment, the trade fee was derived from the M+. So the charge fee is RM 10 ringgits. So in this investment, I managed to gain the some revenue and minimize risk using the investment portfolio. So that's all from me. Thank you.